What makes swing trading in forex so popular and effective? Swing trading in forex has gained popularity and is considered effective by many traders for several reasons. 1. Time commitment. Swing trading typically involves holding trades for a few days to several weeks, which means traders don't have to monitor the markets constantly. This appeals to individuals who have limited time to dedicate to trading or prefer a less intensive trading style. 2. Capturing medium-term trends. Swing traders aim to capture medium-term price movements within established trends. They look for price swings and reversals that offer opportunities for profitable trades. By focusing on these trends, swing traders can potentially benefit from larger market moves and avoid short-term noise and fluctuations. 3. Reduced market noise. Swing traders often use higher timeframes such as the daily or 4-hour charts, which smooth out some of the intraday market noise. This can make it easier to identify and follow the underlying trends and price patterns. 4. Flexibility. Swing trading can be applied to various forex currency pairs, providing traders with a wide range of options to choose from. Traders can select pairs that suit their trading style, exhibit clear trends, and have sufficient liquidity for effective trading. 5. Technical analysis. Swing traders heavily rely on technical analysis tools and indicators to identify entry and exit points. They analyze chart patterns, support and resistance levels, trend lines, and oscillators to make trading decisions. These technical tools help traders to spot potential opportunities and manage risk effectively. 6. Risk management. Swing traders typically employ risk management techniques such as setting stop-loss orders and profit targets. This allows them to define their risk-reward ratios before entering trades and helps in managing potential losses. Proper risk management is crucial for long-term success in swing trading. 7. Opportunity for part-time trading. Swing trading can be attractive to individuals who have other commitments and cannot actively monitor the markets throughout the day. Traders can identify potential setups and manage their trades during their free time, making it a suitable approach for those with full-time jobs or other responsibilities. It's important to note that while swing trading can be effective, it still requires proper analysis, risk management, and discipline. Traders should develop a solid trading plan, stick to their strategy, and continuously refine their skills through practice and learning from both successful and unsuccessful trades.